Hey guys, welcome back. Listen, yesterday's video, we covered NVIDIA and we covered Broadcom and the massive performances they had in the market and how it was setting up a highly anticipated catch-up trade for the memory stocks for the Fab Four that we follow on this channel. Well, today the market had a completely different idea. It was actually a textbook example of how quickly macro data can hijack a perfectly technical setup. The regular session brought a heavy rollback across the board today. The tech sector was down. The NASDAQ 100 was down. In fact, 70% of the stocks in the NASDAQ 100 were down today. They wiped away Thursday's session's earnings. But if you look closely at the tape, this wasn't random panic or a fundamental breakdown of the AI story. What we actually saw was a highly coordinated mechanical de-risking event that was triggered by three distinct forces that were hitting the market at the same time. Macro headwinds today put significant pressure on tech valuations. The ongoing escalating labor dispute out of South Korea, it caused a significant sector-wide contagion today. And then finally, the massive institutional options defense that we saw right at the closing bell that significantly had an impact on Micron. If you're holding positions in the AI physical infrastructure stack like Micron, SanDisk, Western Digital, and Seagate, today's video is going to be a critical gut check for you. We're going to look past all of the high-level headlines and the noise, and we're going to dive straight into the block trades. We're going to look straight at the performance and see exactly how the whales manipulated the closing tape today. We're going to unpack the structural reality of the Samsung crisis and what it means, what impact it's having across the entire sector. And then finally, we're going to talk about a huge corporate announcement that hit the headlines today, an announcement out of Japan that could fundamentally change how capital flows through this sector moving forward. So guys, let's get grounded in the truth. Let's look at the data. Let's look at the tape and just see exactly how today played out. But if you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. Let's start off by taking a look at the NASDAQ 100 and what it did today. You can clearly see across the board, we had a down day. Like I said, 70% of stocks were down in the NASDAQ 100. But look at some of the bright red in the stocks that we follow on this channel that were significantly down. NVIDIA and Broadcom essentially gave everything back today that they gained yesterday. Micron down about 6.6%. AMD down about 5.7%. Intel down significantly. ARM down over 8%. Marvell down 3%. Significant down across the board. We even saw the other memory players, only one, SanDisk, had a bit of a different day. We'll get to that in a moment. And the only other big player, if you look at the Magnificent Seven, was Microsoft. I'm also going to cover that at the end of the video because there's a very specific reason why we saw Microsoft move differently. So make sure you stay to the end and listen to that explanation. But let's jump in and talk about what did impact the stocks today. Like I said, it was a combination of factors, but let's talk about the macro pressure that got put on tech valuation today. First, it was the Treasury yields. You can clearly see on the screen that the 30-year Treasury yield hit the highest level since 2007. But guys, we also saw the 10-year yield go up today. It significantly rose. It hit a fresh new one-year high in the 10-year Treasury yield. So for capital-intensive semiconductor manufacturers, a rising discount rate like we're seeing right now, it compresses valuation multiples. When institutional capital can lock in risk-free yield rates, and like we see right now in the market, the patience that they have for high multiple growth assets, it shortens dramatically. It puts significant pressure on these tech stocks, on these chip stocks overall. And the second thing we saw is just a rising cost of oil. We're starting to feel pressure again in inflationary concerns about the Strait of Hormuz. We haven't heard this in a while, but it started bubbling up today. We saw Brent go up by 8% weekly surge. I saw Brent crude prices now about 110 a barrel across the board. So this put pressure on the stocks today. So when you look at rising yield rates and the rising cost of oil today, like we saw, the whales don't wait over the weekend. They trigger a programmatic de-risking event, and they take profits from their biggest winners. AI hardware stocks, semis, and memory stocks have been the biggest winners. They've been the ones that have locked in the most profit over the last year, let's say 12 months, 6 months, whatever you want to say. So this wasn't a fundamental breakdown today. It was a highly coordinated macro liquidation by the whales. That's what we saw. They shifted capital out of these tech stocks and they put it into safe havens across the board. But we also saw this South Korean contagion that I mentioned. So let me talk about that as well, because it's not just the Samsung. It is the Samsung strike, excuse me, but it had a spillover impact not only into Samsung and SK Hynix, but had an impact across the entire South Korean index today. You can see the South Korean index retreats from a record high. It drops over 6% as heavyweight tech names sell off. If I scroll down, you could see that it dropped 6%. The interesting piece they call out is the South Korean index. About 42% of it is represented in Samsung, right here, Samsung and SK Hynix. They make up 42% of that index. So Samsung today was down about 9% after the labor union said it would proceed with its 18-day strike starting on May 21st. And SK Hynix was down by about 8%. So these were two significant moves for these companies. And the fact that the index was down over 6%, it caused a coordinated sell-off in the global memory proxies. It impacted the US players as well. When you see Samsung suffer an absolute collapse, like we saw in the Seoul exchange today, dropping 9% in a single session, and SK Hynix getting hammered as well, those are two of the largest producers on earth. And when they shed that much value in hours, it completely resets the global sentiment for the sector and the global sentiment for memory players across the board. And because Micron, SanDisk, and Western Digital operate in the same global sandbox, automated trading programs immediately tied them to the Korean index downside, triggering an aggressive flush across the domestic sector as soon as the opening bell hit in New York. And when we jump over and take a look at what we did see with the memory players today, let's start off with Micron, because Micron took most of the pain today. It was the epicenter of pain today, as you can see. It rolled back about 6.6%, like I mentioned earlier, a $51 drop overall from Micron. And it's down again in the after hours by another $8 going down. So it's around $7.16 right now. So earlier in the day, Bank of America tried to defend this stock. It reiterated the $9.50 price target based on insatiable demand for HBM. But institutional selling was relentless today. And Micron spent the afternoon. Let me show you in the candle chart. Sorry, it spent the afternoon in this kind of bearish flag, as you can see, just moving kind of across the board after a significant gap down that we saw right out of the gate. It just didn't have any support today across the board. It stayed around the 720, 728, pretty much all day long in that range. Tried to find a little bit of support in the late afternoon, you can see, but immediately kind of sold off. And it did have this kind of bearish end to the day, this kind of drop across the board. You can see in those last few candles. It spent the afternoon just in this bearish flag, like I mentioned. The hidden mechanics here, though, are tied to today's monthly options expiration. The tape was a battlefield for those 800 call options. This is where retail has been heavily stacked. By rolling the stock back all day like the whales did, the institutional short sellers and market makers ensured that millions in retail premium expired worthless. And if we look at what the after hours or the block trade show us, you can see those last few candles at the end of the day that shot it down. You can take a look here at the closing cross right at the end. The institutional pinning is clear. We had a $2.5 billion closing cross with about 3.4 million shares, let's call it, hit that NASDAQ right at the close, right at 724.66. And then in the after hours, about 24 minutes or so after the day closed, we had another $518 million block, about 715,000 shares printed in the dark pool at the same exact price of 724.66. This is the definitive footprint of programmatic automated liquidation matching. The whales were executing massive block-to-block crossing trades to pin the option board, pushing Micron's RSI to a deeply undersold 28 today. Let me show you what SanDisk. Let's jump over to SanDisk, because they were kind of the opposite of what we saw today. It had the complete inverse performance. As we discussed yesterday, SanDisk technicals were fully de-risked after this week's slide, making that 1400 level a key area to watch for a catch-up trade. At the opening, though, you can see the algorithms triggered a gap down to a morning low right here, morning low of 13.15 that the stock got down right in the first 5 minutes, 10 minutes or so of the opening market today. But selling dried up completely, and the whale stepped in to accumulate. SanDisk decoupled from the carnage today to close the regular session up about 2%. It closed about 1408 today, hitting an intraday high of one point of about 1427 on the board. That was a masterclass in relative strength today, and just exactly what we thought we would see, just because of how much pressure the stock has been under. It was significantly moved down over its moving averages. It was significantly below under the price targets. We just thought it would have a different day today. I thought all the stocks would be up today, but SanDisk actually followed the pattern that the technicals were telling us across the board. And if we look at Western Digital, you can see Western Digital was down about 1.5%, just under 1.5%. It closed at 482. It got slammed early, though, in the day. It actually hit a low of 465 today. But buyers absorbed the selling and pushed it back up to near the top of its daily range today. You can see the range across the board was 486. It just closed right below that at 482. And the hyperscalers right now, though, the way the market is looking at Western Digital, they know we're evaluating it as a pure HDD player. There's massive amount of demand in the market. The hyperscalers are expanding their CapEx budgets to a staggering $190 billion. So baseline demand for this company and HDDs in general remains rock solid. That's why we saw this performance today. And Seagate followed a very similar pattern to what we saw today with Western Digital. You can see it was down about 1% across the board. It followed a very similar recovery arc that we did with Western Digital. At the open bell, it pushed down to a morning low of 765.77. However, the upside was capped. It did bounce back, but it was capped a little more than Western Digital because there was a regulatory filing revealing almost a $13 million insider stock sale from a top executive at Seagate, which created a bit of an algorithmic ceiling for the afternoon tape overall. But the stock is down in the after hours as well. So we're still seeing a little bit of impact across the board for all of the memory players. But I mentioned earlier there was a stock that broke out and it was different. While all these chip stocks were fighting, we saw Microsoft stand tall today. Microsoft was up about 3%. And let me see if my Wi-Fi will work for me, but it was up about 3%. It was about $12. There you go, about $12.50 today across the board. It closed at $421.92. The biggest reason was the story that we saw in Wall Street Journal. So this was the Bill Ackman effect. We'll say this was the market maker moving this stock because he came out and announced that he's taking a massive new position in the software titan. In fact, he said he was selling his Google positions to acquire this position within Microsoft, and the whales just frankly, they followed him. The logic was simple from Ackman, the way he explained it, why the whales followed is that while the chip makers, they handle this volatile environment right now with supply chains and factory strikes that we've talked about, Microsoft has a massive platform moat. It's insulated from this factory floor chaos that we see in Samsung right now. Institutions use Microsoft as a defense shield today, proving smart money is simply rotating into software to catch its breath. But a quiet bombshell dropped this morning too, and I mentioned it out of Japan. And you can see that we're seeing that Kioxia, the memory maker out of Japan, is actually announced that it's preparing for a U.S. stock exchange listing. And to understand why SanDisk showed so much relative strength today, this was part of the story. Remember that Kioxia and SanDisk are married at the hip. These two are locked in a massive manufacturing joint venture. They split multi-billion-dollar R&D bills right down the middle and jointly operate the same fabrication plants in Japan to build their leading-edge BiCS8 flash architecture. And because of this partnership, a U.S. listing for Kioxia affects SanDisk completely different than another NAND competitor like Micron. It sets up a fascinating paradox, though, because on one side, you have an absolute fundamental protection. In the disclosures this morning, Kioxia reported an absolute blowout for their earnings. They guided for a staggering an $8.2 billion operating profit for a single quarter ending in June. They're producing flash 20 to 30% cheaper than the rest of the industry. And because they share the same exact factories and technology, Kioxia's jaw-dropping margins are a direct validation of SanDisk's own balance sheet, proving its underlying tech is incredibly profitable. But based on the fundamental win, you would expect to see SanDisk ripping in the post market. But let me show you in the after hours, it was actually down. You can see it right on the bottom of the screen over here. It's down by about $27 right now in the after hours. So you have to ask yourself, why is it not just continuing to rip in the offer, like soar in the after hours? It's because this brings us to the other side of the coin. Like we said, this is the mechanical liquidity vacuum piece that we'll call. This is a two-step institutional money game that the big whales play that have nothing to do with the health of the business for SanDisk. But first, what happens is they build a war chest. You know, when you have a blockbuster IPO like Kioxia that is anticipated, it's announced and it's anticipated, giant funds don't scramble for cash on the day one of the IPO. They raise it ahead of time. And because SanDisk has been a premier vehicle to play this flash cycle, whales are trimming tiny fractions of their profits now to build a cash reserve for the Kioxia debut. And then the second step is this wholesale cross trade. So big institutions, as you know, they use the private dark pools to move large block trades without cratering the intraday spot price. And at the 4 p.m. bell, clearinghouses match these big sellers with passive buyers at a pre-agreed wholesale discount. When the massive block trades finally print to the public tape after hours, it looks like a sudden plunge, but it's entirely artificial. The business fundamentals didn't change at 4:01. Wall Street is just moving its chess pieces to prepare for the Kioxia listing later this year. So guys, as we close and we think about our Monday game plan, this is how I'm looking at. This is my checklist and what I would recommend for you. First, we have to keep our eye on that 10-year Treasury yield as well as the crude spot price, the crude prices. If the 10-year rate cools a bit, if it gets below 4.5 and oil drops back below $100 a barrel, the market may potentially attempt a violent relief rally in the tech stocks and the memory sectors that we follow. The memory stocks that we follow. I think the second piece is with the RSI sitting at a deeply oversold 28 for Micron right now, it is a prime candidate for a technical dead cat bounce. If Micron establishes a higher low base above 720, look for a swift technical reversal back to the 728, 732 level, that resistance window that we have for the stock. And then finally, I think the last two is SanDisk. It validated, the de-risking thesis today that we talked about yesterday. If the whales use this pre-IPO for Kioxia, the cash raising event that we talked about to suppress SanDisk at Monday's opening, don't panic. Recognize it is a mechanical bear trap, and it's a gift for all of us to buy a de-risked dip in SanDisk. The bottom line today was a reminder that macro liquidity and cross-border contagion can disrupt short-term trends, but the fundamental structure or the fundamental thesis of the AI infrastructure stack hasn't changed. Stay grounded in the technical levels, track the volumes for your stock, ignore the noise, follow the signals in the market, and let the charts continue to guide your execution. Let me know in the comments below. What are your plans? Are you going to buy the dip on Micron that we see right now? Are you going to ride the relative strength of SanDisk and Western Digital ahead of the Samsung strike that we see next week? Stay disciplined, manage the risk you best you can, trust your fundamentals and your gut instincts right now, because we will pass in this market. We're seeing a sector-wide kind of shift that's based on a lot of macro elements in the environment, a lot of macro noise that's having a spillover impact and rotation of capital out of these sectors into other areas. So I'll keep following this trade. I'll keep giving updates on this channel overall. But guys, I hope you enjoyed the video, and I'll see you soon.